Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is February 12th, 2012 edition of Market Outlook. So listen, be sure to subscribe to our YouTube channel, and if you like it, give it a thumbs up if you find this video helpful. If you haven't already, visit MarketGauge.com to sign up for this free weekly analysis. And also, we're in the midst of giving away some free videos about swing trading, so don't miss that also. You'll also find that on our site, and please visit. So, now let's get started. One of the major features of this week is this spike in volatility in the VIX index. This is the nearest out-of-the-money options on the S&P 500. It's a group of different options, and you can see that the movement in the options, we were focusing on it being a bit oversold, meaning sentiment was getting a bit carried away on the irrational exuberance side, and you can see that the volatility moved from around 16.5 to 17%, and on the sell-off on Friday at the peak, we were trading all the way up to the 50-day moving average and the top of the Bollinger Band, a move of almost 20%. And it moved actually to a 21.65 level before it settled down at around 20.79. But it's interesting to note that the volatility has jumped quite a bit, now moved back towards the upper end of the Bollinger Bands. Now, we had pointed this out, that the volatility had been really suppressed, and it moved to the bottom end of the Bollinger Band, and we had actually put on a bunch of strangles and straddles in the Nasdaq, which was the most overbought or at the top of a long-term channel. And we knew that with low volatility that there would be a play, and actually it was quite good because we got a nice move in the upside as well as a pop in volatility, so we sort of got both. Now the key is, let's keep an eye on it, because if we move to the upper end of the Bollinger Band and above the 50-day moving average, that would be a sign of renewed fears about the market. On the other hand, if the Greek tragedy plays out so that it's not a tragedy, that it's a comedy, we might see this thing trail back again, and this was just a few-day wonder. But meanwhile, this bears quite a bit of caution. So now let's take a look at the Nasdaq. What are the charts telling us? As you can see, we have on the daily chart this long-term channel going back to, February of 2011. We sort of consolidated, powered out. So we're still trading above the 10-day moving average, sort of been following this uptrend as we got to the sort of the top end of this very valid trading channel. Peaked out, had a bit of a sell-off on Friday, but nonetheless we're still within this trading channel. So you could trade back down to the 61.50 level, still holding within the channel, but at that point it would be attacking that 10-day moving average. So we really want to see it hold this gap here at around the 61 to 61.70 to 62 level. That's an important level. Overall, we're got pretty overbought. Worked some of it off. There's still some more potential on the downside on this RSI on the daily chart. But again, critical support level back and fill ultimately is around this 60.50 to 61 level. So you can see a good 4% sell-off intraday, and it still not violate the bigger channel that it just broke out of. So that's your critical level. Of course, this could be a one-day wonder. The other thing to take note is you had a down day and a distribution day because you had a greater day in volume. Let's take a look at the before I leave, just also wanted to point out that slope of the 50-day moving average strongly accelerating to the upside, suggesting more upside momentum. Again, the overall picture, short-term correction in the face of this steadily increasing momentum, but a little short-term pressure. That that volatility index definitely of interest. Overbought on the RSI, working it off, but still the overall longer-term channel, as you can see, this channel here, which is ultimate, very important support, especially around the 200-day, or depending on where this potentially, if it does break down, there's still some more support here. But first levels above this black line here, that's actually level 2. Level 1 is keeping this channel intact. So let's see what plays out. Additionally, let's take a look at the monthly and the weekly charts. Monthly, you can see we're doing quite well. The 80-month is this green line right here. Certainly not overbought on a monthly basis on our RSIs, and we're at basically, highs that we haven't seen since 2001. So overall, Q's acting extremely well. Let's move to the weekly charts. Similar picture on the weeklies. This is where I posted that channel that we were at a level that was just not going to be sustainable. We were either going to move away from it or back down. And again, you can see we've now moved to the upper end and powered out of that channel. So that's a pretty important channel, looking again for that retracement and to hold that level. Now, what is of important note also is the fact that we are overbought on a price momentum basis. So even though we've powered out of the channel, we've powered out of it in such a way that the momentum is definitely on the rich side. So looking at the overall picture, that sentiment, the daily RSI, the overall, actually let's go back to the pattern for a second. The overall daily pattern also indecisive. You had a doji day after a spike high to new highs. So indecisive action, very, very high probability of a short-term pullback within this overall positive trend. Now, a little bit more troubling is the IWM. The reason being is, look at the relative performance here of the IWM. You can see that we had 1, 2, 3, 4 indecisive days, basically where the market opened and closed without making any headway to the upside, and ultimately had a doji day, a bearish engulfing pattern, and then Friday's action down under the 10-day moving average. So even though we got the golden cross where the 50 moved above the 200, we stalled as soon as we got it on a short-term trading basis. So looking at the evidence of the VIX, the stall in a much broader index of the IWM, because the Russell 2000 is an index of 2,000 stocks, where the Nasdaq 100 is only 100, and 20% of it, or almost 20% of it, is just Apple, and you add in Google and a few other big stocks. It's not a very broad-based index. So the market is starting to break down from a breadth standpoint. Now, on the weekly basis, you can see we also got a bit overbought 2 weeks ago, and again this sideways action, and down in price for the week. So broad-based, the rally seems to be running out of steam. So maybe a shallow sell-off, potentially more. We'll keep our eyes out, and be totally flexible. Again, in an environment where the rule books change constantly, the short-term trading tactics are really crucial to your trading success. Now, one other point before we wrap it up for this week, let's take a look at some of the market timing tools here. We looked at the VIX earlier, but what we hadn't looked at is the intermediate McClellan oscillator. That is good for several weeks to a month, and you can see that the McClellan oscillator uses not only advanced decline but market internals, and it's averaged out between 19 and 39 days. And you can see that the breadth in conjunction with the volume here is really running out of steam. It's this chart right here. So we got to slightly overbought levels and have been really working off. Now, if you take a look at the S&P, which is up here, you can see we had the doji day on the highs on Thursday, followed by the news on Friday about problems in Greece, and again the down move. But we closed pretty well on towards the end of the day in the upper end of the daily range. So we recovered okay, still down about 0.5%. So interesting. You can see some backing and filling here, running it a little rich overall, and the breadth is definitely getting tired. So that's your evidence. And again, all these indications, the short-term trading tactics are going to rule. Let's see how the market opens on Monday, and we'll create a game plan from there for those of you who are following us on Mish's Market Minute Premium service or the day trading room that we run live throughout the day. So anyway, hope that helps. Look forward to seeing you next weekend, and bye for now. And also, don't forget, check out that new YouTube channel for MarketGauge.com, and be sure to catch those videos on the new complete swing trading system that will be released shortly.